Good morning. My name is Scott Redler, Chief Strategic Officer at TWTR.com. Welcome to today's morning call. I'm here solo. Chelsea had to be out on the road doing some research. And, this morning you're going to hear all about the Bank of Japan, right? If you're at home and you're really not that sophisticated, you probably don't know that, the BOJ was meeting and all of a sudden it could throw a big monkey wrench into a lot of what happened, recently. But anyway, they did meet just like our Fed met yesterday, and our Fed was, I thought, a little more hawkish than dovish, but some people are saying dovish, whatever. We'll figure out the action after. But the Bank of Japan was supposed to, give some helicopter money, and basically they stood pat. So all of a sudden, futures in the Nikkei wound up reversing, or the market over there started reversing, and they went down 3.6%. And that has this kind of trade where it becomes risk off. So we'll figure out how strong our uptrend is today. But first, let's take a quick look overseas to see, what needs to potentially hold. The DAX is only down about 1%. Okay, so not the end of the world. 1%, 1.2%. It's above this trend line that we've been talking about right there, and it's also above the 200 days. So I would think if Europe doesn't want to fall apart, I would think that this spot holds. So this spot on the EWG is around 26 and a quarter. Okay, could even push a little bit below it, but I would say as long as this area holds, you're seeing not too much faulty action there, and this actually trend off the lows is even lower. This just happens to be maybe more of the accelerated trend. So right around here, if you are trading Europe or the DAX, if it breaks this spot, maybe it'll become a little bit of a headwind versus a tailwind. And just so you know, that the HK isn't really down much. I think it's actually maybe even up small. So all in all, the Hang Seng, which is obviously China, not Japan, doesn't care that much. And if you look here, we talked about when this trend was somewhat broken to the upside, and here is your uptrend right here where it's still intact. So we'll see what type of action happens here a little bit more close up, but overseas, still not overnight. This is a headwind with the futures. But all in all, still not derailing what we've seen. I would say a break and close maybe below this little pivot here would raise some eyebrows. And for you, if you want to write that down, that is 33.80. So that is that. So as far as our markets are concerned, we've been holding this upper support, and I would say in the last week to 2 weeks, they've thrown the kitchen sink at the market. You had bad reports from like weaker than expected reports, not even above the lowered bar in Netflix, in Google, in Microsoft. Yesterday was Apple, in Twitter, in CMG. You had Starbucks. Just to name a few, and the S&P still held higher. And then we get the Fed out of the way, yesterday, which basically said they're not looking to raise rates anytime soon, but they think some of the concerns overseas are a little bit abated. And then you get Facebook after hours that explodes through the upper pivot. So you would think today would be an up day, and then you wake up in the morning and the futures are down 15 handles. Oh well, welcome to today's market. So let's first take a look at the SPX. I've been dissecting this trend, and this is actually from last night. Okay, so here's your double bottom, here's your trend line, and this to me is the important spot. So if you remember here, when the market was kind of playing with this 2040 area, remember, that broke through this 2043, went as low as 2033, reversed, and then held and went. I'm looking right into this spot here, which we might be testing early on. This is your 2077. That is last week's low. But your 21-day is now down at around 2073. So they want to shake things up a little bit. What they might do is break the pivot low, get to the 21-day. Everyone's going to start leaning short, and then either we close below it and then we get some corrective phase below this, or it pops back above. So right here, we have the making of this type of day below a key area, but then we'll see whether or not it closes below or can get some follow through moving forward. So at this point here, you do have yesterday's low at 2082, and then you have 2077. So 2077 is going to be the pivot, and then we'll see how we handle it closer to the close. And if you want to look at the spiders, you will see that, very similar. The spiders have this big support going sideways here, okay? And this spot is 207.54, and then you also have a gap, which is at 206.84. So 206.84 to 207.55 with the 21-day, like I just showed you in the SPX, was this area. So we'll see if this holds. Okay, you have this small, inside wedge here, where if we were to break to the downside, I guess finally we could get some kind of corrective period. At this point, we're back towards upper resistance. So you always see some selling. We didn't have blockbuster earnings from a lot of companies out there. We did get Facebook yesterday, which could have been helpful. We'll see. Maybe that'll help tech. We'll get into that. But overall, right back into the upper end of the range after a huge double bottom, red dog reversal buy here, and we've been following this 8-day and 21-day, thereafter. So, if this were to change without using opinions and we were to break and close below this spot, maybe even a little closer to 207, then you have to respect that and figure out where we go next. When we've talked about cleaning up positions anyway, as we've seen lots of holes and lots of generals and key stocks, and now maybe we'll see what is next here. So since I brought up Facebook, I'll get into the Qs and I'll get into Facebook. The Qs have been the weakest sector recently, with a lot of the holes in a lot of the generals. Okay, we talked about the right side of this ascending channel that we broke below, which was right here. This was below 108. Oops, sorry, I drew that a little bit high. 108.12. Let's take a look there a little closer. Let me get rid of this. I did not draw that very well, and I take a lot of pride in my lines. So this is there. And then yesterday, we came into the 200-day, came off it, and closed well. So that's why I got long the Qs yesterday. And I'm still long the Qs. So I'm going to see if I could buy versus the low here of 106.69. And if the market wants to come off those lows, perhaps maybe this gets a little bit of a push above this high to retest a little bit closer to this, this spot here, which was, this 108.12. I don't think you have a blockbuster trade here. I was just figuring, if Bank of Japan wasn't, so disappointing. We could have had that, and we're a little bit lower, hanging in there. So we'll see whether or not we can get a push to there. If all of a sudden, Facebook starts to fade and the high beta tech that's up a little bit with it starts to go red, chances are I'll get out of it, because this is on the right side and this is considered the weaker sector for now, but we'll see if money rotates back into it. For those who are trading Facebook after hours or watched my recap, I isolated 2 areas to be long after the print. I think guys did well trading it after hours in the office. I was in here, unfortunately. This was 114, that was one pivot, and then this was 117. It got above this real quickly, got above 117, retested this, and blasted off. So if you took it home long because it closed above this 117, the all-time highs, right now it seems as if it's around 120, and congratulations, you made really good money. We were all looking at the calls, and the premiums for the 110s were like 3, it was 108. We're like, wow, someone thinks it's going higher. But anyway, after hours trade, it's good to see momentum work after hours. You had this pivot, you had that pivot, and now I would trim some into here, and we'll see what happens today. If you're not in it, we'll see if you get a 5 to 15 minute high for it to pull into, and then you'll see how much of the gap we hold. But in order for this to stay constructive, you would think that it would hold above 117 today, and then we'll go from there. It is kind of lifting some of the other names that already reported but are still somewhat broken. Let's go Google first. Google did hold above the 200-day yesterday. I don't know why all my lines from yesterday are in, from the recap, but they're there, so we'll use them. So it basically held, remember the first thing, okay? Here was your hole in your chart, which it never filled. So that gave you downside follow through. So now, yesterday you did get a reversal, as some people might have been a little worried to be short off of Facebook, and now it's up a few dollars. Here is 730. I'd write down 730, maybe up a few. If it doesn't get traction, but people might try and short the bounce. Facebook delivered, Google didn't. This ascending channel broke to the downside. So 730 is some resistance, and then here is 735. So I think some people who are looking to short a bounce, because it has a big travel range from 709 here, maybe this 730 to 735 is a spot where you'll get some resistance to re-short if that's what you're looking to do. Netflix, this chart also has been weaker. You had your hole right here. Okay, never filled it. Quick little RDR, couldn't get any traction, created that H cell setup, and then boom, boom, boom. So yesterday it did, rally off of a little bit off of 90.21. So if you do see a reflex move because of Facebook, there might be some sellers back around 94, 93. If you've been shorting this, making money and covered yesterday because you're like, I don't know what Facebook's going to do, maybe you get a reshort. There's so much resistance up here. So, I wouldn't be overly enamored with that. So the question now also is just say for Apple, right? There was news out that Samsung actually had a good report, and now everyone's talking how Apple is not making it in China because of all these other companies out there. There are some good ones, etc. I'm not going to get into them, and then there's the bullish camp saying that this 6 was so darn successful, which I think it was, that nobody really upgraded, so they're a victim of their own success and a victim of large numbers. But for us, we're just going to simplify it. And you have Apple's low yesterday, which we could mark down and we could trade against. Here it is. Okay, this is your inside range, which is the pivot to write down you have here for Apple is that's at 95.68. Okay, and then you have let's get rid of this line here because that's from yesterday, and we'll show you. So this is your candle. Okay, we've seen this over the last 2 weeks now, where some of these, okay, after the first earnings candles put in, go sideways and trade into the gap for some kind of cash flow, and some pause and head lower. So the question is, what is Apple going to be like? Is it going to be like an IBM, where IBM actually, wound up having its earnings candle, which was right here, where you had your support, you had an inside day, and then it took out the 2-day pivot to fill the gap, and IBM's been acting well as a value name and it still looks okay, or is it going to be like I just showed you? Could be a Microsoft, right? Microsoft, had its earnings candle, couldn't rally, went below it, and is trying to hold the 200-day, so there was no traction there. And I just showed you also with Netflix. Netflix, no traction to the downside. So for Apple, the jury's out on whether or not it's going to have an inside day and then trade into the gap once they put their buyback machine on, or go sideways and get downside follow through and test this lower area, which comes in closer to 93 to 92. And if you look again at the the longer term chart, which we went over, it's still not that constructive. Okay, you have a downtrend from here that it came up and tested and failed at. You have some guys pointing to a head and shoulders top pattern with the left shoulder, the head, the right shoulder, and then this 92 area is huge. Okay, remember the last gap down you had here? Okay, never filled, big downside. So just be a little flexible that you're right here near big support. There's a huge hole in the chart, and we'll figure out if it gets filled. And then so that's your tech for now. So the banks got a push yesterday, but kind of failed. I was in what was I in yesterday? I was in Citigroup, and I was actually in Morgan, and then I was in Goldman. So I was trying to play the banks, thinking that maybe if they were hawkish, we can get an extra push, and they were kind of neutral to dovish, so I got out. So now the question is, can these things hold their upper flags? Again, this group is a broken group. You have Goldman Sachs not even above the 200-day moving average, where most sectors are above it. So that's why you always have to be a bit careful. So we'll see, what type of move Goldman has today to see whether or not, they think the Fed is that dovish. For me, I would say, right down this spot, if you happen to still be in Goldman Sachs, use this 164 area as your stop. It's been above the 21-day, this whole entire time. So, if that trend breaks and you're a momentum trader, you get out there. JP Morgan is the leader in the banks. It's already above the 200-day. So if you want to, watch the leader to see what the leader's doing, which is usually the smart thing to do, here is your spot. Okay, this for upper momentum to hold, which is what we play, usually upper momentum, you would think this 63-ish area holds. If it breaks, then and you decide to stay in it, you're probably going to have to, hold your nose and wait for it down to 61.82. So we'll see what happens with the banks. Recently, oil has been where the baton has gone for the bulls. Tech's been weak, small caps have been strong, and oil is, even in the inventories number yesterday, guys like, holy cow. I know we played the TWTR quickly and got stopped out. Oil has been really strong. Do you chase it up here with oil above 45? I don't know, but sometimes it doesn't mean it's a short either. In the USO, it just got above this resistance area, so I would say, for this to hold in there, you want to see this like 1090 hold, and if 1090 holds, maybe it works its way back towards the 200-day. The XLE has been in fuego, and here are all the spots we went over on the recap. This was when it woke up. You had that huge wedge, and traders love wedges. We love tight patterns because when they expand, you get moves, and this one was a lower wedge, okay, and it broke to the upside. Then it held. Then you had this gap up. Remember no Doho, when Doho didn't have the results that everyone thought, but it reversed, and now look where you are. So there is some resistance in the 70-72. You have 2 days up. It's down a little bit, I would say. If you're looking to continue to buy the dip, the 8 days all the way down here, so be a little bit patient. And then you have gold. Okay, gold is driving guys nutty, especially if you're going to go from day to day, because there's so many false breakouts and breakdowns in the GLD and even the miners. But now gold has its chance. Can it get above 120? Can the GLDs break above it and go? You look at this upper wedge or this upper channel. It's been up here now for 3 months, driving guys batty. Okay, here is support. Here you have a little bit more upper support. Okay, and it's above all the moving averages with resistance. This is your pivot high of 122. So if a big if it gets above 120 and stays above 120, I think guys will probably add to positions for it to take out 122, and then your next level really is a 127 spot. This is when it took back the 200-day and woke back up. If you go to the weekly chart, even though it's already had a big move, you could see why the bugs are dancing a little bit, because they're thinking that the trend in gold has changed. Okay, so if you got out of the GLDs when this, look at this big wedge, wow, broke to the downside or it broke below here, you had the luxury of buying it back when it got above this descending channel here, which, look at this pretty symmetrical picture. So Freddie, if you want to take a picture of that, there it is. And then here is your upper flag with the 200-day at 123. That really will be your next obstacle, and then some think that it can get up towards 127. But in order to do so, it needs to break and finally hold above 120. Hercules. And we'll see, I'm a nutty professor. So anyway, here's the GDX. The GDX has had a big move also. It broke its descending channel here, working its way. Some think it can get to the 200-day too on the weekly, which is up here. So see if that continues. Let's take a look at the daily chart of the GDX. Stair-stepping higher. It's been a really big trade for some guys this year that were looking for like the laggard type of move. Lots of spots to get long. Here's where it just held. I guess now short term you'll see whether or not it can get above this and stay above it, 23.82. Still above the 8-day, above the 21-day. Some of the leaders in this group that people are trading, you have Newmont. Newmont has been trending. Look at the size of this igniting move here, and then it also held and then held again, and now the question is, you have to just be a bit careful because it is extended, but if it gets above this 32.58 perhaps, you see a little bit more upside. And then I think some guys are also looking at this ABX, which also is flagging. And you have base on bases, which sometimes get a little harder to trust, but again, as long as it's above, look at this, the 8-day held the 21-day, went again. You could see some more action, but in order for the miners to really get going, you're going to need gold to potentially finally take out that area, and on the GLDs it's 120 and then 122. So all in all, today is a day after the Fed day, which sometimes is a trend day. The question is it going to be a trend in the direction of the futures this morning? So what could give us some potential clues? A, if the banks fall apart, more weakness. If oil that ignored the inventories yesterday starts to go from flattish to down, more weakness. If Facebook that's at 120 starts to fade down, and Google and Amazon and Netflix go red, more clues. So then what do you have in the spiders? You have you have 207.55, that's the pivot. If we were to break below that, I'd probably get out of my overnight. Okay, then I see where we put a pivot low in. It could be a 30-minute, it could be a 60-minute, and then if we get back above it, maybe I buy it back versus that low to see if we get a reversal, and and then we go back to the upside. But if we break below and hold below, I'm going to be out. I'll probably be out of the queues, and I'll wait. We've had a very methodical week and a half. Unfortunately, the way this market is, when you thought maybe we were in the clear, they give you a little bit of a leg sweep because they don't like anyone feeling too comfortable You know, the computers don't have any feelings, so they're never uncomfortable. They just, you know, have their programs, and same way we have to be programmed to have our stops, and things can change fast. So when they change fast, we just change. And you know, we'll see how it goes. Tune into the VTF, tune into the chat. I'll try and tweet some things out, and I'll see you at the recap. Have a great day trading.